Crypto has seen a massive sell-off over the weekend as fear has spread through the market. Prices crashed on major altcoins. This all coming, of course, from the back of the SEC making brutal moves against the entire cryptocurrency industry by going after major exchanges and labeling more than a dozen major cryptocurrencies as securities in their lawsuits against those exchanges. There's a lot we need to unpack here, so make sure to watch the whole video. You won't want to miss any part of this because there's some serious info here you need to know if you're holding these altcoins. First, let's talk about the bloodbath. Many major altcoins dropped by 30% over the weekend, including popular ones like Polygon, Cardano, and Matic. It was brutal. The markets haven't been this bad since the collapse of FTX. There are a few major reasons we saw the big sell-off over the weekend. The first, of course, is simply just the fear, and it's just a basic truth, but people are freaking the frick out, man. Panic selling definitely drove a lot of action over the weekend. That I better get out now before it gets worse mentality. The social media panic mill isn't, of course, not helping with proclamations that crypto altcoins are going to be banned in the USA, which, of course, is not true at all. Second, Crypto.com has said that they are closing down their US-based institutional exchange services. While they say this is just due to limited demand in the market for those services, the timing has quite a few people thinking that this is actually due to what the SEC is doing. Retail services for Crypto.com do remain unaffected at the moment, although Crypto.com is the last major cryptocurrency exchange to not be sued by the SEC. Yeah, probably coming any day now. I hope not, of course, but logic would dictate. And while the actual news story here for Crypto.com is really just a bit of a nothing burger, I think the FUD and the panic around it were actually there. People were freaking out a bit over the weekend. Third, whales unloaded just huge clips of ammo into the market over the weekend. This includes both major anon whales and major crypto firms that are just reducing crypto exposure due to the uncertainty in the markets right now. Fourth, we have Robinhood. They're delisting Cardano, Polygon, and Matic. Robinhood is holding hundreds of millions of dollars worth of these coins, which will be sold into a very low liquidity market. In fact, some of that was already sold by people just getting out of these coins. Some people transferred off, most people sold, most people are probably gonna sell. Also, a further note to all of this, none of what the SEC has just done is going to be decided anytime soon. The legal proceedings here could be drawn out for a very, very long time. In fact, there is actually a decent chance that by the time the courts are actually ready to rule on all of these cases, that politicians could have actually passed a crypto regulation law by that point, which could be signed in by a new administration, assuming that Biden doesn't win a second term, of course, that is, because he's very anti-crypto. With all this crazy going on, I'm reminded of a simple truth about market cycles. Money is made in the bear market, and then we cash in during the bull market. The people who made it big in 2021, they largely bought in 2019 and 2020. 2023 buyers, in my opinion, will be the 2025 millionaires. And I know how you're probably feeling right now. Your bags are down like 90%. It hurts. It sucks. Everyone's against you. Regulators are definitely against you. With all this bad news, it feels like, well, crypto's just never going to recover. Social media timelines are all filled with people panicking, panic selling, lots of bad news headlines, but here's the truth. There will always be another cycle, man. Greed has not disappeared magically for markets. If you can wait out the next 18 months, then chances are you're going to be very well rewarded for that. But no matter how bad you are down, you're probably not down as bad as this guy. This is from Coinfessions. This guy right here said he spent over $100,000 on gifts to some popular crypto influencer girl. Simping is alive and well, apparently. He was kept in the friend zone the whole time because of course he was. And now she is now dating the bad boy that she told him not to worry about. Ouch. By the way, before we dive deeper, I want to let you know about my weekly cryptocurrency investor report. It is called the Wealth Mastery Newsletter. Every single issue is just packed full of the latest news in the crypto markets, charts, airdrops, DeFi, altcoin, alpha, and much, much more. Join our 75,000 weekly readers and sign up for free. Yes, for free, by using the link down below. Okay, so according to the SEC, what are securities? Well, here is the complete list so far that we have from the SEC. Now, there's some really old dead coins on here, like Paragon, which was like some, weed-based coin. There's Dragon Chain, other ones as well. But the ones we're really interested in are some of the biggest coins in the cryptocurrency markets right now. Coins like Cardano, XRP, Tron, BNB, Solana, Matic, Axie Infinity, Algorand, Dash, and more. However, big crypto protocols, they are hitting back. They are speaking up. Of course they are. Solana came out and said that they disagree, although they did not say why in particular they disagree, but they said we disagree. Okay. The Polygon team pointed out that they made Matic outside of the USA, deployed Matic outside of the USA, and they focus on a global effort with the vast majority of their users based outside of the USA. Cardano Development Studio IOHK said under no circumstances is ADA a security under US securities laws, and it never has been. Strong words coming out from the Cardano team. And look, hot take here from me, these assets being listed as securities would not actually be like the end of the world, even though in many cases they are simply not securities. They do act like software. They are more like digital commodities. But the SEC has made it almost impossible for any companies to even come in and register, even if they wanted to. A couple have, but it's very, very difficult. The process is super non-transparent. Oh, this is funny, by the way. Apparently, Coinbase actually has a license to list securities, but guess who won't allow them to use that license to list securities? The SEC. That's insane, man. Second hot take here as well. The SEC can claim all kinds of crap in its complaints to the courts, but it doesn't mean that they are facts. The SEC can literally say that unicorns are real and that unicorns are securities if they wanted to. But that doesn't matter. They can say whatever they want. And until a judge rules on it and says that yes, unicorns are indeed securities and are real, none of it really matters. So this is all going to be a case for the judges to decide in the courts, and they're basically the SEC saying, hey, courts, here's our complaints. Make a decision. Now, what is not a security? Well, Bitcoin for certain is not a security. Ethereum probably not, although there have been some conflicting statements from the SEC in this regard, so we'll see how that plays out. Proof of work coins like Monero, Litecoin, and Dogecoin, definitely not securities, at least so far. Polkadot, interestingly, not a security. It is being classified by the SEC as software, so that's pretty cool. Hopefully it doesn't change. There are a few other outliers like Stacks and INX that are not securities, or which are securities and are registered as such, which INX is. Also, it is worth noting here that there has been actually a lot of pushback against what the SEC is doing. A lot of people are not taking this lying down. I'm not talking just about, crypto influencers and crypto industry companies. A new bill being proposed in the USA would actually solve most of the issues that the crypto industry is currently facing. So basically, it would create a path for exchanges to be able to register, very simply, and would allow them to trade tokens that are either commodities or securities. We also saw a bill last week that would look to make crypto into commodities, not securities. Now, all this stuff is a big step forward. There's been other bills too being worked on besides that, but all of it feels useless as long as Biden sits in the White House because he is super anti-crypto, right? Old grandpa there, banks are just telling him, hey, Biden, we don't like crypto, crush it. So he'd probably veto any sensible legislation that comes through, unfortunately. Although at what point do the big money guys get involved here and say enough is enough, stop wrecking our funds? Some of the biggest VC funds in the USA are invested in crypto. Phone calls are going to start going in. People are going to be pissed. Right? There will be backlash to the coming offshoring of 1 million jobs in the Web3 industry. That's ridiculous that the US is passing up this opportunity. Look, it's obviously a massive loss here for America if this administration does drive crypto offshore, if they let the SEC continue doing what they do. It's going to be a massive loss for US investors. Obviously, the SEC out here protecting the 1 in 5 Americans that own cryptocurrencies by generally destroying their assets, smashing the prices, and screwing them over. Good job, SEC! And yes, the crypto market is much bigger than the USA, as this image here shows. The USA maybe accounts for about 10% of the global cryptocurrency user base, which is very big, but far from everything. However, US capital markets account for a little over 50% of global markets. So we cannot pretend like the impact of US actions will not have broad-reaching consequences beyond US shores due to basically the ability of US capital money to float crypto up. Just remember, while the SEC can destroy the crypto industry domestically in the USA, they cannot and will not kill crypto. Also keep in mind that this is not our first rodeo with overzealous regulators. China has banned Bitcoin like 10 times before. And in fact, China is now basically giving up and just trying to regulate and tax it, opening up Hong Kong, all that other kind of stuff. The actions by the USA, it's going to have the same result. And of course, on the other side of that whole equation from the USA regulatory crackdown is those who are going to win from what the SEC is doing, which is basically everyone else in the world. Hong Kong legislators, for example, they've been calling for Coinbase, move to Hong Kong, come here, register, we're ready for you, come on over, water's nice, hop on in, get out of the USA. Other countries will be more than happy to take America's biggest Web3 companies and biggest Web3 investors and biggest Web3 developers, and yes, a lot of that US Web3 money. Crypto's not gonna stop. Might cool off for a while in the USA, especially unless legislators actually legislate. I mean, they've had so much time to pass bills and they haven't done it. Let's get some actual legislation out that's going to stop the regulators from screwing over the industry. And can we also take a moment here to realize that while there's all this, US regulatory insanities playing out and causing all this fear, that actually, on-chain data here, many blockchains are seeing record high usage. Remember, last month, we had a new high of daily active addresses. That is despite the regulatory uncertainty that we're seeing right now, despite the bear market, despite the macro fears. Crypto has never been busier. That's crazy. And the Bitcoin halving is less than a year away. Big picture, right? I personally will continue to accumulate throughout 2023, and apparently I'm not alone, as Bitcoin holders, according to this chart right here, are acquiring about 37,400 coins a month right now, which is pretty damn significant. In fact, a tried and tested investment strategy in crypto has basically been to buy whenever there are lots of people who start screaming at the top of their lungs, this is the end of crypto, it's over, sell now and get out, because it never is the end. Okay. Except for this video. Okay, that's it. Subscribe now. I'll see you next time.